The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I am your host, Darrell Martin, and I hope you're having a great day out there. If you have any questions, please give me a call. I'd be happy to answer for you about stocks, forex, futures, options, Nadex, and anything in between there, right? So 877-927-6648. Again, that's 877-927-6648. And like I said, call in with any questions you got. I'd be happy to go over them with you. And as we do each and every day, we go ahead and catch you up on the markets, and we'll be talking a little bit more about some of the news announcements that came out as well. And we'll go into some market analysis. Right now, the markets are pulling off of their deviation levels. And we post those, of course, over in the Diagnostic Trading area and get access to that. And go ahead and give you an update. Well, looking at everything right now, we got the S&P is up about 1% right now, up 13.5 points. And we have the Nasdaq over here. Now you can see the S&P, by the way. It went in ahead and it gapped up and kept it going after that news came out this morning. And then the news that came out a little bit later kept going. And then, like I said, it pushed on up to that deviation level. And I'll pull those up for you in a little bit here. The Nasdaq is up 35 points, and it's sort of the leader of the group. It's up 1.3% right now. The Dow is up 114 points, not quite 1% at the moment. And then looking over at the Russell, it is up just 4.3. And giving up quite a bit of its gains that it had. Pardon me. Sorry about that, folks. Tried to turn the volume down there. 4.5 points. You got live radio. 4.5 points up, about 0.5% up right now on the day on the Russell right there. And like I said, it is moving on down. And then if we go a little bit lower over here, checking out the, appreciate that. We go on and we check out the, let's see here, we'll go ahead and we'll look at the energy markets. We got oil. It is up 83 cents on the day right now. So right now it's about 1% based on that report that came out. We'll go and we'll look at that. And not just a massive movement, moved a lot of that move already before the report came out, drew back off the report. And, they bumped the report back to Thursdays. And they even changed the time on it and everything because of the markets being closed on Monday and Tuesday. Anytime there's a holiday, and I guess a market closed day, they bumped that oil inventory report back. They also bumped back the consumer sentiment report to today with the markets being closed. Looking on over and checking out, so that's oil. And what else we got here? We got silver. We can check out silver. Silver is flat on the day. And don't forget, you can register to win for the Great Panther Silver giveaway. And we'll be making an announcement here. We have another winner for the day. I'll be announcing that right after the first break. Going on over and checking out natural gas. Natural gas right now is about the flattest on the day that I've seen it in a long time. So it is, up 0.001. It's up a tick from yesterday's close. So that's absolutely amazing compared to how much it's been moving lately. And looking over at copper, copper is up about 1% on the day. So copper moving on up. And it's at 0.032, 0.0315 right there. So moving up quite a bit on the day. Some good moves. You can trade, by the way, all the markets I'm talking about right now over on the Nadex exchange. Corn, barely moving, only up $3 on the day. And we can see what other markets we have that would be really good. Let's go ahead and check out our currencies. I want to see if there's also any good movement over on one other market. I always like to check out the soybean markets. They've been fun to trade lately. Today they are up 15 points on the day, so they're up about 1% right now. And if I go on and look back on over at our currency pairs, we can see that let's see here, euro dollar is down 26 pips. The pound dollar is up 3, basically flat on the day. Aussie dollar up 20, US yen up 31, US franc up 10, and the US Canadian down 27. So, got some decent little moves there, but nothing major going on in the currencies. All the focus today has really been on the indices. And they fell like crazy yesterday. They decided to run up like crazy today. But they ran up a little too hard, too fast, and I think they're giving that back up right now. And So, definitely be aware of that. And if you were long, you definitely would have been tightening those stops along those deviation levels. And I'll go ahead and pull up the ones for today on the S&P here. We'll just take a quick look at that one. And then I'll go ahead and we'll talk about the fundamental reports. What came out today and what was new and unique about today. And there was a report. I talked a little bit about this yesterday. And we'll go to that specifically. But on the S&P, we had an expected move up to 1418.5. And then a further move, if it did go over the full move, up to 1427. Didn't hit the 1427, definitely hit the 1418.5, and that's a half deviation level right there, or that's a full deviation right there. And if it does retrace back down to, say, like a 0.7, that'd be a move down to about 1413.5. Okay, so if it does keep going, that's probably my target, is 1413.5. We really do want it to break back below that one deviation mark, and not just consolidate. It's been consolidating almost this entire time. We did finally see a little bit of strength right there on this last down move where we actually broke the volume for the majority of the day. If you're looking at like a Rayco style bar, if I go over and pull up your classic 10-minute bar charts, let's see here. I'll open that up. We'll look at that and see how that looks on the day. And go into it. There we go. And maximize that one for you, and then pull the chart up, and we'll break it down to intraday. Then we'll look at the 10-minute bars and pull up the S&P. And let's see, there we go. So you don't really see a massive volume surge on the 10-minute bars, but looking over at the Renko bars, you can definitely see a lot of volume happening comparatively to the other bars of the day, right here at this 1422 range. So that's where the market started to sell off pretty strong. And this is where they started taking profits. Okay, we saw a lot of volume right here. They started taking profits. We're seeing that exact same price level. So if I go up here and look at this, as what's going on right here. So they sold off. They dumped off the rest of them, and the market's been sort of trending down at the moment. So we'll see if that continues. But it looks like it is continuing sort of across the board on most of the indices right now. And if I pull those up, I'll just throw all the indices on there for you. There you go. Here's the indices intraday, and there's the dailies showing the gaps on the day there. But they are pushing down pretty strong, like I said, across the board. And let's go ahead and now look at our fundamentals. So what happened today that was different than previous days? That's unique. Well, the ADP non-farm employment change happened, and that's, of course, not a big deal, right? Except for the fact that they changed how they do the report. And, that to me, it's massive, because what they did is they went and they included two more industries, okay, two more sectors, and they added two more sizes of companies, and overall they added 2 million more employees to their roll call for doing their employment change. The reason that they did it is because they want to match the Bureau of Labor Statistics report that comes out on Friday, the non-farm payroll on Friday. And now they're not trying to match the Friday reported number, okay? They're trying to match the number that comes out actually 3 weeks or 3 months or 2 months later, I guess. Because what happens is that report comes out, non-farm payroll, and they revise it next month, and then they'll revise it again the month after. So what they're trying to do is they're trying to predict what that final number is going to be. And ADP has access to not, instead of waiting on reports from companies, they actually have the company's payroll information because they're ADP. They process all the, a chunk of the checks in the entire country. So that's why they changed it. But by adding to it, of course, it immediately is going to make the number higher. So I really wasn't that shocked that it was higher. Was it really higher? The one thing we don't have is we don't have what they would have done it the old way. What would the number came out as? So that added some strength to the markets. And we can go in here. And the markets already had a little bit of oomph going into it anyway. It's like there was already that expectation. You see them sort of flat. And then the expectation was coming in that report was going to come in positive. And it was released out at, 8:15 here. Right there. And you can see as soon as it was released, the market took off. And there was an expectation that report would come in better than expected. Simply because when you add 2 million people to the numbers that you're calculating, the chances of your number going up are, pretty good. So it doesn't necessarily reflect a true improvement. It is a larger number than last year. It's better than some of the recent historical numbers that we've had, but it's actually worse than the last 4 months. but better than a good chunk of the year. And then if you go back and you look a year back, the number compared to November of last year, much better than November of last year. But again, they added in 2 million people, over 2 million employees into the jobs. And you can actually find out more about that over at the ADPemploymentreport.com. And they go in and they actually talk about all the different details under the FAQ. And they go what they did. It says, okay, well, we added in 5 instead of just 3 class sizes. Now we have 5 industry categories instead of 2 categories. And it basically expanded from 344,000 companies that they're reviewing to 406,000 companies. And that increased the number from 21 to 23 million companies across the board. So basically it accounts for more than 20% of all private sector employees. So a decent statistic number to use whenever doing any kind of measurement or stat analysis. But that's what came out on that report right there. And then looking on over and checking out some other things here, we'll see. We got from the stuff, we had the Challenger job cuts. That really that's not really a market mover. We did have the pound manufacturing PMI. And so let's go ahead and check out the pound on that and the impact that report had. It came out early this morning at 5:30. So right here, let me refresh this. Make sure I have the most current information. There we go. Okay. Let's see. Manufacturing PMI at 5:30, and that came in negative. Came in at 47.5. There was an expectation of 48.1, and that did weigh on the pound, gave strength to the dollar right there, and it moved on down, as you can see, right before that. And the nationwide HPI number came in, and that came in better than expected for Britain. And, I mean, talk about this moving around the news, right? 3 a.m., came in, and boom, as soon as that number was released, came in positive, market moved up. Next number came in negative, market moved back down. So, I mean, completely news-driven, fundamental-driven moves right there. And in between, just flat. Looking on over, let's see, we had the unemployment claims, of course, also came in this morning. They came in better than the expectation. They thought they'd be at 371,000. There was only 363,000. And they also came in better than the actual numbers over the last couple months. And because they actually had to revise up. Here's the thing. They had to revise up the last couple months' numbers. So they moved up. The one last time was 369. They moved it up to 372. The one before that was 388. They moved it up to 392. So they revised those numbers up, but this number beat the expectations. So it was a good thing, I guess. And if we go back and look at last year's November 2011, and then we can see that the number came in a little better than last year at 397. So across the board, it actually beat recent expectations. So it's actually a pretty good report for unemployment claims comparatively to expectations and past. Stay right there. We'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Masters Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And welcome on back here to the Diagnostic Trading Hour. And we got another announcement to make right here. We got the Great Panther Silver Halloween giveaway. And you can go on there and just click on Halloween giveaway. We're giving out some more silver bars today. And what you want to do is just fill in your information right there, hit submit. Nothing else you got to do. We're going to weigh one every hour. Right now, we're going to weigh half-ounce bars today. And like I said, we do have a winner. And you can find out more about Great Panther Silver right here on TFNN. Just click on Great Panther Silver. And it's a mining company. There's a lot of great information on here. You can check it out. And definitely something you want to look into. But again, fill this out. We're giving away one. And right now, go ahead and announce the winner. And the winner for today is Scott from Palam, New Hampshire. So congratulations, Scott. Make sure you go ahead and give us a call if you can before the close of the day here at 6 o'clock, 877-927-6648, and so we can get that out to you and congratulate you. But again, congratulations, Scott, on the Great Panther Silver giveaway. And again, that's a half-ounce silver bar that we're giving away today every hour. And all right, so let's go ahead and hop back on over and check out the Forex Factory and see what's going on and all the different announcements here. So we also had the consumer confidence report. It came out this morning. I'll pull up the chart on that, see the impact, and the ISM Manufacturing Pmi. Both, the consumer confidence basically came in at expectations. The ISM, it came in above expectations. Okay, the PMI is a purchasing manager index where they interview a bunch of purchasing managers. So makes sense, right? And we go here, and consumer confidence, obviously, a measure of people's 5,000 households and how they feel about basically the economy. It's a quick summary of it. And those came in again. Confidence came in right at expectations and really at a really high number for the year. So consumer confidence is getting very, very, very high. It's been a long time since we've seen a number this high. I mean, we're talking back in February of 2008. I'm trying to see if there's another time we've had. Yeah, I can't see another number since we've had that high on the consumer confidence report since February of 2008. So sort of interesting. But something to watch out for because, of course, everybody knows 2008 would happen a few months later. But anyway, so we go ahead, we rolled on over, we're checking that out, and they came in at 10 a.m. Eastern Time. We go ahead at 10 a.m. right here, and what we'll be able to find out is right there. No impact whatsoever. So really no massive impact on the markets overall, and just checking that out, we really didn't see any massive impact on that report. So nothing, which is surprising. Usually, if it's that good, we'll get a bit of a bump. But the market, I guess, had already rallied its way up, and it was sitting at the deviation levels. And going on over, let's see here. We got crude oil and natural gas inventory reports came in. So let's go ahead and check out natural gas. Over on natural gas, we had the report come out earlier this morning, and let's see, right there at natural gas came in at 10:30, 9:30 Central, and that'd been right here. We can see right when that report came out, we definitely had a flight up, back down, and then on back up again. Natural gas inventories came in a little lower than expected. They came in at 65 billion, expectation of 68 billion. So with the supply coming in lower, that should cause the price to rise. It did. So you would have had two chances for entry. One, of course, you could have straddled before. The second one, when it came out and then it pulled back, you could have bought in again and got out when it moved back up to this high right here. And a great place to do that would be, of course, on Nadex binaries and spreads. And it looks like we got a caller on the line. I got Garo from Alaska. How you doing, man? You doing good today?
Yes, sir. Yes, sir. How are you today?
Hey, I'm doing great, man.
I thank you very much for taking my call. Calling regarding rosters, R-O-S-T. Remember about last week I shorted it at 61. And you told me that wait until it goes to 63, and then you cover it from there on. It's going to be bull, and I kept it until now. The same way with OIS. Yesterday you told me that it's going to go way lower. Remember OIS? And again, I hold it, and still today went down another $2.24. So regarding Ross, how low you think it's going to go, sir?
Well, why don't you stay right there, and I'll let you know right after this break.
Yes, sir. Yes, sir.
All right.
All right. All right.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, Darrell, how you doing?
Good. Thank you, sir. Thank you.
Awesome. So we were talking about, now, when you called in before, we were a couple days ago, we were talking about OIS, right?
Yesterday I called about OIS, right. And you told me that sell half of it. So I had 300 shares shorted at 75, and I just sold 150. I made $600. Now I have another 150 shares. Now I'm $800 positive. So I'm going to keep it a little bit longer. But on OIS, I have 300 shares. I shorted at 61. And my stop loss was at 63. You told me that 63 and up is going to be, you have to get out. So I kept it. It didn't go to 63. So now it is 56, 57. Now, should I get rid of it? Should I cover it? Or should I...
okay, go through that one more time. Okay, so we went on OIS and ROST. Okay, so ROST, you got in at what price? You went short at what price?
Ross, $61 at 200-day moving average.
Okay, so you shorted right over here, over at 61, right?
Yes.
And then we had a take profit sitting. I was telling you to put that take profit like right above, or not take profit, stop loss, right above there. Yeah, so like 61, 66 to tighten that on down. And then so you shorted that, and you're up quite a bit now, I guess. How many shares did you have on that?
300. I short 300. I didn't go any more than 300. When I short it, I get nervous, so I don't go much. Yes. Yes, sir. And I don't go 600-700 shares, but when I short it, I go 300, not more than that.
Okay, so you went ahead and you went short on that, and you're up quite a bit right now on the trade, so
Yes,
pretty good
yes.
profit on that. Now, what I would do is I'm looking at this right now, backing up on the chart, and Ross just made a 50% retracement, okay? So if we go back on the chart, we can see that since this last little bump that we had a 50% retracement, and it stopped right at that level. And you can see how, like right there, if you're looking at it on Tiger TV.
Yes, sir.
And so that definitely would be a good zone to take some profit. You'd be very happy with that take profit, okay?
All right.
At least half of it, okay? Because I would not be surprised after a day like this. Now, we did have a good volume there if we zoom in on that. I mean, we had pretty good number of shares come out, almost 5 million shares today so far. And
Right.
that's a good, strong pattern for continuation on the continued move down there. And it moved down. Let's see here. If we go over here, this also was, like I said, the 50% retracement of the next big volume bar that we had previously. Okay.
Yes.
We can see move down to right here. The price level is 54.58. Okay. So if it does decide to continue, we can easily see it going there. I probably don't see it going without a strong pullback too much further than 53.10. So, but I would definitely, I'd take some profit off now, because no matter what, if you take off profit now, at least on, say half the position, I mean, you're not going to be upset about that one at all. And if it does go back up, at least you got paid to trade, and that's what it's about, getting paid to trade, removing your risk, move your risk at least down to break even on your other half. Okay. And then, and I definitely keep an eye on it the next couple of days. I mean, it could pull back up before it goes back down. It may even pull back up here to about, around $58, $90, $60, and then bounce off that and come back down, depending upon. But I mean, that volume was a strong down volume bar. So unless they were just taking the profits, on their short trade, then I mean, we can easily see it move down a little bit further. I'd give it about $4 more at the most, but down to 53.12 at the most, and I may even want to take off part of my profits if it does hit this, basically 54, 55 level right here. So the low of that bar, let's see, is 54.71. So yeah, I'd say right at 55, I'd probably take off another 50%, so like 25% of your original position, and see if you can let the other one run just a little bit longer, and start trailing that stop down pretty tight after that level. So, but good job, man. Both trades worked out well.
Yes, sir. Yes, sir. I'm really, really happy. Is there? Do you want me to get rid of all of them at 300, cover the 300, and go and short it at 59 again if it goes higher?
Are you talking about if it goes on back up? I wouldn't just short just because it goes higher, because I mean it could be turning around. So you want to see, like right here, we see how we saw it like slow down, like right when you were getting in over here, and you see all this consolidation happening.
Yes, yes.
So they're basically accumulating for the downside.
Yes,
and so that was a good point. I mean, not only did we were in a short pattern, but also, I mean, you had that accumulation happen right before the drop. See, right here we had the same thing: accumulation before the drop. We had accumulation right here before the drop. So you don't just want it to like go straight up, because you sort of be, you get in the wrong. You don't want to get in the wrong direction there.
No.
But I mean, at the same time, I mean, that's a great profit. So if you want to take off all 300 now, you could. I mean, you caught one of the biggest bar moves that it's had in this entire year. So I mean, I think there's only like one or two other days that were even bigger than that. They may not even be totally bigger if we measure them high to low, but that's probably at least in the top 5 biggest moves of the day on Rost, and you caught all of it and then some. So
absolutely.
But and you just, if you see a better trade setup, I mean, you're at a good point right now. If you see a better trade setup, figure out a better place to put your money. Then don't be afraid to take it and put it somewhere else. Don't just sit there and wait. But if it does come back up, always make it break that low of the previous day before you hop back in, because I mean, you want to see the market moving in your direction before you get in. Now you can enter a day, but so like right here, whoa, seem to wait in far on that, but right here, like this right here would have been like an entry, and then right here would have been an entry like 61.82. So that would have been an entry right there, and then right here we would have had an entry at 60.72. Would have been another possible entry. So you had to make it basically make it start moving in your direction before you get in. So, and but yeah, I mean, you done great. Keep it up, man.
Very good. I wrote it down. I wrote everything you said while you were talking. I was writing down. I will keep a very close look at this one. I may get rid of it. It makes me very nervous here at this point. I don't want to lose none of it. I may cover the whole 300 shares here and see what will happen. after that.
I would not be surprised if for the next several days you saw it go sideways. So when you have that kind of volume happen, I mean, and look at like these big, like see this big bar right here?
Yes.
I mean, it did continue up, but I mean, it didn't go anywhere for almost a month. And part of your profit you got to take it. And then this one, when it moved down, it did have two big down move days, but I mean, then it reversed right off of it. This one right here, it basically went flat for about a week and a half. And I mean, if you included all that, you almost have a month and a half where it didn't do much of anything. So when you get those big move bars, you definitely want to take some good chunk of the profit off, because a lot of times, there's not just, you're not just looking at your risk management. You got to look at, is your money working for you the best way it can? And it's not if you leave half that money in there and it's going flat. So if it doesn't do something for you in the next day or two, I definitely just close out the rest of it. So.
Yes, sir. Yes, sir. Thank you so much. Thank you for your time and listening to me. I appreciate it, sir. Thank you.
Oh, thanks for calling in. Appreciate it.
Very good. Bye-bye.
Very good.
Bye.
You bet. Call in anytime. Awesome. Well, so some other good trades. You got to love it when you see that out there, and got to love shorting the market. That, one of my favorite sayings. Of course, I'm sure you've all heard it before, but it's bull goes up the stairs and bear goes out the window, because it falls a lot faster. But when it does fall hard and fast like that, you got to love it. And at least when you're a trader, right? I guess if you're Ross, you may not like that. So, but also, some other things. Ross is going to have some things come in. Of course, though, near the end of the year here, they're going to have their holiday seasonal sales and everything else. So you can be checking out their stuff on their fundamentals on their website, their news reports, their PR press releases, things like that. All right. So now let's go ahead and check out. Let's do a quick recap across the market and see where everything is sitting right now. And what I'll do is I'll just pull up the charts and we'll look at each one of them. So we got, here we go. And let's zoom on in and we'll check out the intraday bars. And we're going to talk about where deviations are, see if there's any setups still sitting there for us to take advantage of. And again, you can always get the deviation levels for the major indices, for the major currency pairs, 5 currency pairs, all the ags, oils, everything. We post those live every night in our website, so you can take advantage of them for night and early morning trading and on into the afternoon. And but looking at the S&P, it had a deviation level of 1418.5, and it's really been sitting right at that deviation level. Like I said, we really need to see it break that. If it does break that, it could definitely move on down. But we need to see it break that. Once it breaks it, we got a strong, good move. We could probably expect to move at least down to 1413, if not 1410, to wrap the day up. So it could move back down, almost filling, not the gap, but at least the open since the open. But and there's a lot of uncertainty. We got that big employment report coming out tomorrow morning that you want to be aware of as well. And just to look at that, make sure you know the times and everything on the employment report coming up. Let's see here. We got. We're going to have our employment and non-farm employment both coming out at 8:30 Eastern time tomorrow. So the uncertainty on how that's going to come out, and of course coming out right before the elections and going in, is going to have an impact. We're going to go ahead and check out the Russell. The Russell has made a pretty strong move on back down. It's really pushing it right now. And we had a move on the Russell up to 823.3. And that was the expectation. And then it moved a little bit further, pushed on up to 828.5 would have been the expectation. Didn't quite hit a 1.5, but it definitely hit the 1. That'd be your tighten stop point. So you'd be tightening after bars right there. You would have closed out around 824 if you're long. And then it's looking to go short, and it has went short. And actually it's down near the 0.7 deviation level. So if you're short, this is where you're going to look to start tightening your stops on your short trade as well if you went short on the Russell. And I did go short on most of the indices here, and still short on them right now, up when they hit up these highs on these deviations this morning. And over on the Nasdaq, we got the Nasdaq move on up here. Let's see, we had expectation. Now, it took off pretty strong, but we got 2666.75, and so that had been right here. That was a 1 deviation, and it just blew on past that. It went up even higher. The next expectation was 2883.50. That's 1.5 deviations, and we just barely hit it by like a point, over a point there, and then it pulled back off. Nasdaq has showed some real resilience today, and still hasn't made as big of a retracement as like we've seen on the Russell there. And but a move on back down, if the Nasdaq does decide to fall on back down, would be down to 2656 would be really our target. Looking on over at the Dow moved on up and then started to pull back. It took a little while, but then it decided to go ahead and join in with everybody else. And the Dow right now moved on up pretty strong all the way up to 13,212. And which was actually past 1.5 deviations, almost 2, like right between 1.5 and 2 deviations. But the 1 deviation mark was 13,129, which is right here. And it hit that hard when it had both of those news reports come out back to back positive. So boom, boom, hit it, came down, sort of sitting at that deviation level. So we'll see if it can break back below that before the day's over. And if it does, we'd expect to move on down to 1387. And then looking on over now and checking out the copper. On the copper side of things, we got copper up to, went up to 3.569. We had an expectation of 3.565. So pretty much right on the money there. So 565 would have been right here. This would be where you'd take off your profit if you call the long copper trade. It's been going up all night long and into the morning, and would have been a great take profit zone right before it pulled back. Looking on over, and Pitts are closed now over on the copper markets. Checking out gold and seeing how it played out. Pitts just closed over there on the gold side. And there was a move down expectation to, let's see here, 1712. And it didn't quite hit that because it sort of oscillated up and down. So we didn't get quite a half a deviation down. And on the upside, it had a move expectation up to 1726.8. We did get the upside move. So 1726.8, it got a little bit higher than that. We got a high of 1727.5. So if you were long at gold, that would have been a great point to take that. Don't know quite if I would have went short on that one. But if you did go short, been a great point. It was right at the deviation. And then looking on over at silver, pull that one up. And it moved on up here to a high of 32.695. And on silver, we had an expectation of a move to 32.64 and then up to potentially 32.78. But 64, you've been tightening your stops. Would have worked out well because you would have tightened it again, and you would have had, basically called it right there, and then it reversed right off that 0.71 deviations you could reverse off of. Would have been a great reversal play on back down where it filled in the gap on the silver. And Pitts closed over there on the silver markets now. Looking over at our natural gas trade. And on natural gas, you go in, and let's see, it moved up. And it's been a little while today with this report coming out on natural gas. And let's see, the inventory report on natural gas came in, and I'll pull that up real quick. The expectation, I actually wouldn't, usually I'm hopping on that one, but today with everything coming out a little bit differently, it came in, a little bit below, I talked about that earlier, it came a little bit below expectations. And so that did cause a bit of an increase, but it didn't really keep it. And natural gas moved on up to a high of 3.742, and we had an expectation I'd move at least to 3.736, maybe on up to 32.64. Didn't quite hit the, let's see here, 3 point, I want to pull that up, 753. Okay, so it did hit that level, and it moved on up 3.779. Did we get the 779? Did not get the 779. So, but we did get the 0.7 deviation level there, so it works pretty well. It hit, it pulled on back down. Now, what about on the downside with this big, crazy down move? But, not that crazy compared to yesterday's close. So that's sort of what you got to look at. You can also use the deviation levels from high to, going down, not the high to low, but when you're at a high and it starts moving down and you want to measure how far down you think it's going to move. And it moved on down there to 3.655. And that would have been right at the half deviation mark, which is 3.650. So it was just literally perfect as far as its down move. Would have been great for doing a binary straddle on. Stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour here with Darrell Martin. We're going through and we're looking at a few more things, wrapping them up here. And going into oil right now, on the oil market, we had a move on up to a big old move with that inventory report. The inventory report came in at negative 2 million barrels of inventory expected, with 1.9 million barrels of inventory, which is usually basically what they expected. So it was like 4 million barrels less. And not only was that less, but it was significantly lower than the previous number. The actual was 5.9 million. So huge difference there. But oil moved on up to 87.42. And on oil futures, we had an expectation of, looks like 87.43 for a 0.7 mark. So within a couple ticks there, definitely would have been tight in the stops. And I could have grabbed a decent little profit there on that inventory report. It just shot up and then just went flat since. And so not as big of an impact, not on its usual trading day, but still, nevertheless, a big move on up in oil. I mean, that's a solid $1.50 day there. And so, quite a bit of P&L in there, so every point on oil is worth $1,000, $1 move. And by the way, you can trade it over on Nadex with a limited risk, and you can even do like binary straddles or spread straddles on it. Checking out the corn market, looking over at corn, and zooming in on that one. Corn went in and zoomed up and came on back down. On the high side, it went up to 763.25, and we had an expectation up to 762.75. So right there, I mean, we basically, you would have closed out, looked for a reversal of the day. It did go ahead and start moving on back. When it moved on back down, we had an expectation, and I don't even know if we're going to get to this right now, but we'll see. They're going to be closing up here. Corn moved down to 746.50. So that's about as far down as we'd expect corn to go at this point. And if you were short, I'd be tightening stops as soon as it passed that closing price of yesterday's close right there. So I'd be tightening right here. And I'm looking to tighten pretty soon because it could easily just flatten out for the rest of the day. Now, soybeans had a nice move overnight, ran on up pretty high. Expectations on that move, and this is the nice thing about these deviations, they let you know sort of, are you too late to the party? So, sometimes you get in, you see a market moving, you want to get in, you don't want to miss out. Well, this helps you know, hey, you're getting in a little too soon or a little too late. So, you want to see things working out the right way, and if it's already made its deviation move, you really don't want to go in and grab any more of it. Looking at the high, we got a high of 1571.5 on soybeans. We had an expectation of a move up to 1572. So, I mean, you're talking 2 ticks off. Like I said, if it's a point or so, you're done. That's a 1 deviation move. There's no more room. You don't expect it to move any further. And again, we post these levels every night, so they're very helpful. This will let you know, stay out of soybeans or go short soybeans, but don't buy soybeans at this point. Looking on over and checking out a couple of our currency pairs for our FX traders out there. We had the Aussie dollar. It moved on up to a high of 1.0409, and we expected to move up to at least 1.0406. So if you did that and you tightened your stops, you were a happy camper, and it turned around and moved on back down. And then looking on over at euro dollar, it's been a little choppy, as you can see here. And on the downside, 1.2924. We had an expectation of 1.2922, so within a couple ticks. And then our first half deviation of the move up, 1.2981. And we had an expectation up to 1.2994, so that didn't even quite hit a half deviation mark. But I did hit the half deviation and bounced off. That's almost a 1 deviation move from top to bottom. And then looking on over, we'll do a quick wrap up on the markets and just looking at the major indices for you. And let me pull those up and we can see where all of them are sitting at. And we see we got the S&P still up, still holding strong at that 1 deviation level. The Nasdaq starting to sell off a little bit, but still holding strong. The Russell is giving it up more than anybody, and the Dow is starting to move on down. We'll see what happens here in these last couple hours of trading. Trade safe, trade smart, and check out the Diagnostic Spread Scanner and the Diagnostic Deviation levels over on TFNN.com. Have a great day.